Welcome to Learnify, your gateway to knowledge and growth. We're thrilled to have you here as part of our YouTube community. Today the title of our video is, The Evolution of Money. How Money Evolved in History of Humankind. The evolution of money from the bartering system to cryptocurrencies has been a complex process that spans centuries. Here is a concise overview of the major milestones. What is bartering system? In ancient times, people engaged in barter, exchanging goods and services directly without a standardized medium of exchange. This system had limitations, such as the requirement of a double coincidence of wants and difficulties in determining fair exchange rates. Disadvantages of bartering system. Lack of standardization. Bartering required a direct exchange of goods or services, which often led to difficulties in determining fair exchange rates. The subjective value of different items made negotiations challenging, and there was no standardized unit of account. Double coincidence of wants. For a barter transaction to occur, both parties had to possess the goods or services that the other party desired. This double coincidence of wants was a significant obstacle, as finding a suitable trading partner with mutually beneficial needs could be time-consuming and impractical. Indivisibility. Some goods were indivisible or had indivisible units, making it difficult to conduct precise exchanges. For example, if someone wanted to trade a cow for a smaller item like a sack of grain, the value mismatch made it challenging to find an equivalent trade. Lack of future value. Bartering focused on immediate needs, and it was challenging to store value for future use. Without a standardized medium of exchange that could be easily saved and transported, accumulating wealth or planning for the long term became challenging. Limited geographic reach. The bartering system was primarily localized and relied on face-to-face interactions. This limited the scope of transactions to nearby communities, hindering the development of broader trade networks and economic growth. Absence of trust. Barter transactions often required a high level of trust between parties, as there was no established authority to guarantee the quality or authenticity of the goods being exchanged. This lack of trust could lead to disputes, fraud, or the reluctance to engage in transactions. Commodity money. Over time, certain goods with inherent value, such as shells, beads, and precious metals like gold and silver, emerged as mediums of exchange. These commodities were widely accepted and had value beyond their practical use, becoming early forms of money. Representative money. As economies grew, carrying around large amounts of valuable commodities became inconvenient. People started using representative money, such as paper notes or tokens, that represented a claim on a specific amount of a commodity, typically gold or silver stored by a trusted authority like a bank. Fiat money. With the rise of nation-states and centralized monetary systems, governments began issuing fiat money. This money derives its value from government decree or legal tender laws, rather than having intrinsic value. Fiat money includes coins and paper currency, which are widely accepted as a medium of exchange within a country. Electronic money. As technology advanced, electronic money emerged in the form of digital transactions, such as bank transfers, credit cards, and online payment systems. This allowed for faster and more convenient transactions, reducing the reliance on physical currency. Cryptocurrencies. In 2009, Bitcoin introduced the concept of cryptocurrencies. Cryptocurrencies are digital assets that use cryptography for security and operate on decentralized networks called blockchains. They enable peer-to-peer transactions without the need for intermediaries like banks. Cryptocurrencies have gained popularity due to their potential for privacy, security, and borderless transactions. How are cryptocurrencies the safest form of money? Cryptographic security. Cryptocurrencies use advanced cryptographic techniques to secure transactions and control the creation of new units. This cryptographic security makes it extremely difficult for malicious actors to counterfeit or manipulate transactions, providing a high level of protection against fraud. Decentralization and blockchain technology. Most cryptocurrencies operate on decentralized networks known as blockchains. These networks consist of multiple nodes that validate and record transactions, making it difficult for a single point of failure or manipulation. The transparent and immutable nature of blockchain technology enhances security and accountability. Strong authentication and privacy. Cryptocurrency transactions typically require strong authentication, such as cryptographic keys, to access and transfer funds. This authentication, coupled with the pseudonymous nature of transactions, provides a certain level of privacy and protection against identity theft and unauthorized access. Resistance to inflation and government interference. Many cryptocurrencies have limited supplies and predefined inflation schedules, ensuring that the value of the currency cannot be arbitrarily manipulated by governments or central banks. This resistance to inflation and government interference can be seen as a safeguard against economic instability. Global accessibility and borderless transactions. Cryptocurrencies operate on the Internet, enabling fast and borderless transactions across geographic boundaries. This accessibility reduces reliance on traditional banking systems, which can be subject to restrictions, censorship, or inefficiencies, providing greater financial freedom and security. However, it's important to note that while cryptocurrencies offer enhanced security features, they are not immune to risks and challenges. Factors such as market volatility, regulatory uncertainties, hacking incidents, and user error can still pose risks to individuals and their cryptocurrency holdings. It's crucial for users to exercise caution, practice good security measures, and stay informed about the evolving landscape of cryptocurrency to mitigate potential risks. Thank you for watching Learnify. We appreciate your time and interest in our content. If you found value in what you've seen, don't forget to hit that subscribe button to stay updated with our latest videos. By subscribing, you'll never miss out on our engaging and educational content that's designed to inspire and empower you on your learning journey. We're excited to have you as part of our community, and we look forward to sharing more knowledge and insights with you. Thank you for supporting Learnify.